So good morning once again. I am Ali Akinapa, your tutor for ACT 102. So we have done justice with 4 study sessions. So we're about to start with the 5th one. So try as much as possible to look into all the questions one by one. So get ready for the quizzes, assignments, your mock, then the exams. So I wish you best of luck. So without wasting much of our time, permit me to share my screen and start properly. Mute yourself. So let's start properly. So this is study session 5. If you can see my screen, just wave, signify, please. If you can see my screen, please signify. So good, thank you. So here we are about to talk about the types of taxation. Try as much as possible it will be of help. If you can take your pen and your jotter, because there are some things that we need to discuss here. So, and it will be of help. You know, in our previous classes, we talk about taxations, and we made mention of various types of taxation in our last classes. I'll just try as much as possible to brush through the previous classes on taxation. So I said something about tax. I said tax is a compulsory payment so levied by government on individual corporations and firms. So the major reasons why government levy tax on individual corporations and firms is that any tax collected by government is for the citizen, so as to provide essential services. Do you understand? So that's the major reasons why tax is being levied on individual. So without wasting much of our time, I would try as much as possible to brush through the various types of taxes that we have in Nigeria. So then I will now look into your manual appropriately. So I said something about the VAT in our previous class. I call it value added tax. Please try as much as possible. You need to jot something down. So I said something about VAT, that is value added tax. As of February 2020, the value added tax has been increased by from 5% to 7.5%. Do you understand? So that's the thing that you need to know as far as value added tax is concerned. So, you know, I gave an example of MTN the other time. Do you understand? So MTN, Airtel, government agencies, banks, and oil and gas companies are required to deduct at source their VAT charged by their suppliers and remit it to the tax authority, such as Federal Inland Revenue Service or State Board of Inland Revenue Service. So all other organizations too, they are required to collect VAT. Do you understand? They are required to collect VAT charged on their invoices from their customers. Do you understand? For filing and payments to the tax authority. That's the thing that they need to do. Do you understand? So then we have custom duties as well. You know, I just want to brush you through all those various types of taxes that we have. So we have custom duty too. So custom duties in Nigeria are levied on imports. That's the major thing. The custom duties are levied on what? On imports. So rates vary for different items, typically from 5% to 35%, and are assessed with reference to what? The prevailing harmonized commodity and coding system. We call it HS code. Do you understand? So in summary, the rate for custom duties in Nigeria is just from, it varies from 5% to what? To 35%. Then airlines registered in Nigeria and provide commercial air transport services are also entitled to duty-free importation of their aircraft, engines, spare parts, etc., even the components. Do you understand? So whether they purchase it or they lease it. So that's that about custom duty. Its rate varies, and it varies from 5% to what? To 35%. It depends. So then we have the excise duties. That's another type of tax levy on beer, stout, wines, spirits, cigarettes, homogenized tobacco manufacture or import or imported into Nigeria. So, and this rate is what, 20%. You know, the reason why governments impose tax on these duties is that they want to discourage the consumption of all these things. Because, you know, look at the tobacco in their, what is it called? In their logo, they always say cigarette is dangerous to human health. Do you understand? I don't know actually the actual statement they made for that thing, but they said it's always dangerous to what? To our human health. So if government want to discourage the consumption of the tobacco, what the government needs to do is to put heavy tax on this particular commodity. So excise duty on tobacco and alcohol beverages have increased effective from 1st June 2022, while excise duties have been introduced on non-alcoholic beverages and telecommunication services. So that is that. When we are talking about this tobacco, from 1 June 2022, in addition to the 30% ad valorem tax is a form of what? Value-added tax. So that is the tax levy on what? On commodity. So a specific rate of 4.2 will be paid on each cigarette stick. That is, on each stick of cigarettes, you're going to pay 4.2 naira. That is 84 naira per pack or 20 sticks. So it depends. So in 2023 now, that is as of present, the specific rate will increase to 4.7 per stick. That should be 94 naira per what? Per pack of 20 sticks. Do you understand? Then there's a projection also in 2024, the specific rate for this tobacco will increase to 5.2 per stick. That will be 104 per pack of 20 sticks. The implication of this is that government want to discourage the consumption of what? Tobacco. Then we have beer and stout. With respect to alcoholic beverages, no ad valorem tax rate is applicable. But in 2022, 40 naira per liter is payable on beer and stout. That is 40 naira per what? Per liter is payable on beer and stout. In 2023 and 2024, there's a projection that 45 naira per liter and 50 naira per liter will be what? Will be payable. So what this one is telling you is that the consumption of alcohol needs to be what? Needs to be discouraged. Although for the fact that government has been increased the rate, the due on these beverages, do you understand? People are still consuming it. Do you understand? So then we have the same thing as for wine as well. In 2022, wine has increased to 20% ad valorem tax. That is a specific rate of 15 naira per liter will be paid. So that is that. Then we have the spirits, we have non-alcoholic, carbonated, and sweetened beverages. So excise duty will apply to non-alcoholic soup, the carbonated and the sweetened beverages, which might include the fruit juices and energy drinks at a specific rate of 10 naira per liter. You can imagine for the spirits, they say 65 naira per liter. Do you understand? For the wine, they say 60 naira per liter. But now, when they are talking about juices, because the effect on human health is what is positive. Although too much consumption of all these what is it called? All these carbonated drinks is not good, but it doesn't have an harmful effect on human being. So that is why their rate is just 10 naira per liter. So we have telecommunication services as well. So excise duty are levied on communication services as well. So that should be, I think, is 5%. That one is 5%. So then we have property tax. That's another important types of taxes. So we have property tax. Property tax in Nigeria are usually levied annually by state governments with varying rates depending on the state and the location of the property within the state. So what they are saying here is that when you are when government want to levy tax on what? On property. So it depends on the rate that the government of that particular state think fit. Do you understand? It depends on the rate he or she thinks fit. Then we have the stamp duties as well. So stamp duty is payable on agreements executed in Nigeria or relating whatsoever to any property situated in or to any matter or thing done in Nigeria. So those are the things that you need to know. Then we have as well another types of, we have capital gain tax. Do you understand? So on disposal of chargeable asset, when you dispose a chargeable asset, so it is the capital gain tax that you pay on that particular asset. We have police fund levy, we have payroll contribution, we have pension contributions. Those are the types of taxes that we have. So having understand all these type of taxes, the next line of action is to look at the various types of taxes. You understand? I said something. Tax is a compulsory levy imposed by government or its agent on individuals, companies, or on goods and services. Do you understand? So now this session will now introduce you to the features of various tax systems, relation between direct and indirect taxes, various purposes of taxation, economic effect of taxation, and the difference between the tax evasion and tax avoidance. Those are the things that we need to understand as far as this session is concerned. So let me quickly run through the learning outcomes that we have here. So the first very learning outcome says you have to explain what the features of tax system is all about. Then we have to describe the relation between direct and indirect taxes. We have to highlight the various purposes of taxation, then discuss economic effect of taxation, and finally, distinguish between tax evasion and tax avoidance. Let me start with the first learning outcome, which is features of tax system. So an important features of tax system is the percentage of tax burden as it relates to income or consumption. So when you look at the percentage of tax, you know whether you are paying a high tax or a lower tax. And that can be attributed to progressive, regressive, and proportional taxes, which are used to describe the way the rate progresses from low to high or from high to low or proportionally. So the term describes a distribution effect, which can be applied to any type of tax system, that is income or consumption, that meets the definition. So now, for these forms of tax system that we have, let's talk about them one by one. We have progressive tax. A progressive tax is a tax imposed so that the effective rate increases as the amount to which the rate is applied increases. Let's assume you are collecting 20,000 naira as salary. The amount that you are going to pay as tax, if it is fixed at a particular rate, when your salary has been increased to, let's say, 50,000, the amount to pay as tax will also be what? Increase progressively as your income increases. Then we have the regressive tax. So under the regressive tax, the opposite of regressive tax is what? Is progressive tax. Or let me say the opposite of progressive tax is what? Regressive tax. So it is regressive, where the effective tax rate decreases as the amount to which the rate applied increases. It is regressive in the sense that when your income increases, the rate of tax to be paid will what? Will be when your income increases. So the rate of tax to be paid will be what? Decreases. So that is what is regressive. Regressive. So this effect is commonly produced where means testing is used to withdraw tax allowance or state benefit. That is when you want to discourage payment of taxes among individuals. So you can make a policy by way of paying through regressive tax system. So that's what it means. That is to withdraw tax allowances. So people would what? People will be benefited. Then last on the features, we have proportional tax. So in between the progressive and regressive tax, we have a tax that mediates between the two. So which is called proportional tax. This is where the effective tax rate is fixed, while the amount to which the rate is applied increases. If your income increases, either arithmetically or geometrically, the rate of tax to be paid with what? Will be fixed. So that's what we mean by proportional tax. So proportional tax is between the progressive tax and what? And regressive tax. So that is that about proportional tax. Then we have another one which is very, very important, which is called lump sum tax. A lump sum tax is a tax that is That's a fixed amount, no matter the change in circumstance of the tax entity. This is in actuality is a regressive tax, as those with lower income must use higher percentage of their income than those with higher income, and therefore the effect of tax reduces as a function of what? As a function of income. That is lump sum tax. So let's really talk about direct and indirect tax. Direct and indirect tax. So taxes are sometimes referred to as direct taxes or indirect taxes. The meaning of these terms can vary in different contexts, which can sometimes lead to confusion. So an economic definition by Atkinson states that direct taxes may be adjusted to the individual characteristics of the taxpayer. May be adjusted. We are talking about direct tax. May be adjusted to the individual characteristics of the taxpayer. Whereas indirect taxes are levied on transactions irrespective of the circumstances of buyer or seller. So in indirect taxes, there is no fixed rates. Do you understand? So those taxes are levied on transaction irrespective whether the buyers and the sellers, whether they have different features in common or they are from different they are from different status. So it doesn't mean, so these taxes are levied on transaction irrespective of what the circumstances of the buyers and what and the seller. According to this definition, for example, income tax is direct tax and sales tax is indirect tax. Income tax is what? Direct tax. And sales tax is what? Indirect tax. You can see the difference now. So income tax is what? Is direct tax. That is, they are the taxes that may be adjusted to individual characteristics of the taxpayer. Where the sales tax are the indirect taxes levied on transaction irrespective of the circumstances of the buyer or the seller. In law, the term may have different meanings. Direct tax refers to poll taxes and property taxes. You can see the kind of taxes that I've mentioned above. Your poll tax, your property tax, they are form of what? Direct taxes, which are based on simple existence or ownership. While indirect taxes are imposed on events, rights, privileges, and activities. Thus, a tax on the sale of property will be considered an indirect tax. Whereas the tax on direct taxes, owning the property itself will be a what? Will be a direct taxes. That is, when you own a property, the property tax is regarded as what? Is regarded as indirect. Is regarded as direct taxes. Then we have under the indirect and direct taxes, we have fees and effective taxes. Fees and their effective taxes. Government may charge user fees, tolls, and other types of what? Assessment in exchange of particular goods, services, or use of property. These are generally not considered taxes as long as they are levied as payment for a direct benefits to the individual paying. Such fees include tolls. That's toll gates, tolls. These are features to travel via a road, bridge, tunnel, canal, waterway, or other transportation services facilities. What they are saying here is that this can not be considered as real tax because the payment of this tax has a direct benefit to the what? To the taxpayer. So historically, tolls have been used to pay for public bridge, road, tunnel projects. Although this time around, I can say the reverse is the case. But notwithstanding, that's the major reasons why these taxes are being levied on individuals. So they have also been used in privately constructed transport links, that is to link roads together. So there will be easy transportation via vehicles, lorries, cars, and some other mode of transportation. So the toll is likely to be a fixed charge, possibly graduated from vehicle type or for distance on longer routes. We have user fees, such as those charged for use of parks. So when sometimes when an individual buy a trailer, you cannot park a trailer in your house. So when you park your trailer in the park, so government will usually impose a charge on you. So that's called user's fee. So we have ruling fees charged by government agencies to make determination in particular situation. That's ruling fees. Some scholars refer to certain economic events as taxes, though they are not levies imposed by government. These include inflation tax, that is tax on inflation. So what is inflation? Inflation is just a persistent rise in the general price level of goods and services over a particular period of time. So as what we are experiencing this time around, so the inflation tax is the economic disadvantage suffered by holders of cash and cash equivalents in one denomination of currency due to the effect of expansionary monetary policy. Look at what is on ground presently. You can see that there's an inflation, thereby the price of goods has been on increase. Indirectly, that is what the inflation tax is all about. How? Now there's no cash. For you to buy something is very, very difficult. So now what you need to do is that when you get to where to buy something, they will say you don't have cash. If you don't have cash, you will not be able to buy this thing. Or if you want to get cash, presently, if you want to get 5,000 naira, they will remove 1,000. That's for those who still have mercy on masses. They will remove, some will even say 2,000 naira for 5,000, and that's very bad. You pay 7,000 to get 5,000. You pay 5,000 naira times to get 3,000. You pay 10,000 naira times to get 8,000. So those are the things. If you look at that thing now, you are using money to buy money. That is with the same currency. Do you understand? So now the price of goods too has been increased. You know, somebody I want to sell something now, and that person knows that you don't have cash. That person may run to all these what is it called? Those people that initiate the policy of all these POS of a thing and get POS. Do you understand? And increases the price of what? Of his or her good. Do you understand? So when the price of, you don't have option than to buy because you really need it, but you don't have cash and you have to buy that particular thing. So that is that about inflation tax. That is an economic disadvantage which is suffered by holders of what? Cash and cash equivalent. We have financial repression. So financial repression is it has a negative effect on human beings. So government policies such as interest rate caps on government debt, financial regulations such as reserve requirements, capital controls, barrier to entry markets, where the government owns or control businesses, is referred to as what? Financial repression. In economic terms, taxation transfers from household to the government of a nation. The side effect of taxation and theories about how best to tax are an important subject in microeconomics. Taxation is almost never a simple transfer of wealth. It's never a simple transfer of wealth. Economic theory of taxation approach the questions of how to maximize economic welfare through taxation. So taxation is something that should benefit the country. Let me give you an instance. Look at United States of America. What they have majorly is what they got from tax. If you see all their advancements, all their development, focus down on what? On the tax that they collect on corporations, individual, and the one that they levy on their goods and services. Those are the ways that they generate a major percentage of their revenues. Do you understand? So now, in United States of America, you cannot have more. If you have two houses in USA, if you have two houses, you pay a lot of taxes because you are not encouraged to have more than one house. And everybody can build a house. Everybody can get a house in US. The reason is that once you have what can sustain you to get that particular house, do you understand? Once you have it, the next line of action is that they will spread the payment for you. You can pay for a building for like 40, 50 years. Do you understand? You can pay for vehicle. If you buy, you can in US, you hardly see people buying all these Tokumbo car, all these used car. Do you understand? You can buy brand new car in US, but you can pay for like 10 years. Do you understand? So those are the things that you cannot have more than, you can, if you have 3, 4, 5 cars, you pay taxes for parking, you pay tax on that particular car. So now, let's assume you now have, so what's the essence of having 2, 3 cars? Why you are using a brand new car? What's the essence? What's the essence of having 2, 3 houses when you are living comfortably in a mud con houses? Do you understand? But in Nigeria, the fact is the case. People are getting 10 houses, 15 houses, 20 houses because they don't pay tax on those houses. And even that they are paying tax, they will not get more than one houses, more than one house. Unlike United States of America, all their things are minimal and they are authentic, real. So because of what? Because of tax. People pay a lot of tax in the United States, but they are enjoying the benefit of those taxes. If you have a friend in US or an uncle or anybody, just ask the person, sir, sorry, how long have you been in the US? If the person said 10 years, just ask one simple question that, sir, have you ever experienced NEPA issues? Have you ever experienced all these road pothole on road? Have you ever experienced all those things that we are experiencing here in Nigeria? Just ask your uncle, your brother, anybody in US that do they experience those things? The answer will be no. How can we experience issue of light in United States of America? Look at the Uganda that is not up, their population is not up to 50 million. It's not up to 50 million. They have stable lights. They have stable light than Nigeria. I spent close to 9 months in Uganda, and I can count the number of times that I've experienced issues of light. And even if they want to take their light, you have to be notified. And sometimes if they take the lights, you won't know till they will bring the lights, because the freezer will still cold. So many things, even the houses will still be cold. You won't know unless you are plugging something or you on the light and the light just went off. Then you know that NEPA has taken the light. So, but the reverse is the case in Nigeria. And majorly, if country want to progress, the tax issues should be what? Should be considered. So don't let us waste much of our time on that. Let me quickly move to tax incidence. So laws established from whom a tax is collected. In many countries, taxes are imposed on business, such as corporate taxes or portions of payroll taxes. However, who ultimately pays this tax, the tax body, is determined by the marketplace. Our tax become embedded into production cost. Economic theories suggest that the economic effect of tax does not necessarily fall at a point where it is legally levied. For instance, a tax on employment paid by employers will impact on the employees. Look at that statement. A tax on employment paid by the employers will have an impact on what? On employee, at least in the long run. The greatest share of the tax burden tends to fall on the most inelastic factor involved, the part of the transaction which is affected least by a change in price. So, for instance, a tax on wages in a town will, at least in the long run, affect property owners in that areas. So what they are saying now here is that, in a simple language, if a father pay tax, it will have an effect on what? On the children. That's just the simple analogy. So if an employer pay tax, in the long run, it will affect the employee. Do you understand? So that's the tax incidence. That is from whom tax is collected. So tax might be collected on a particular person, but burns on another person. Let me give you an instance. Look at these shirts. that I wear. Do you understand? Tax has been paid on this shirt. The originator, that is the person that produced this shirt, do you understand, must have added a particular amount of money as tax to the production cost of this shirt. So now, if the production cost is 3,000, so now the tax to be collected, let's say 500. That is 7.5% of 3,000. So 7.5% of 3,000 will be added to this particular tax and shirts. So, but the individual, the person that bought the shirt, which is me, do you understand? We now pay the production cost, the production cost plus the profit plus what? Plus the tax on this shirt. That's the total amount that I'm going to pay. If the production cost is 3,000, the person will have this profit. Let's say the profit is 535. Then the fact on it, let's say is 750. So that is 4,250. So the me that want to buy this shirt will pay 4,250. So that is tax incidence. Do you understand? So that is that about that. So if you look at all this story here, that's what they are trying to put across. So now let us quickly move to purpose of taxation. Why do governments impose taxes, be it federal government, state government, or local government? Why do they impose taxes? What is the reason for tax imposition? So now, one of the very important reasons why government need to raise money for the provision of essential service, such as the maintenance of law and order, the administration of justice, law courts, the construction of food, the provision of health facilities. That is the major reasons why government need to raise money. That is, government need to raise money for the what? Provision of essential services. Government impose taxes for the provision of what? Essential services. So what are the essential services that we're talking about? Maintenance of law and order, administration of justice through law courts, construction of roads, provision of health facilities, etc. Another important reason is why government need to raise money, or why government need to impose taxes on individual corporations or firms or on goods and services, is to check inflation. Is to what? Check inflation. Inflation is the persistent rise in the general price level of goods and services over a period of time. Inflation occurs when the quantity of money in circulation is greater than the available goods and services which money can buy. So you have money, quantity of money in circulation is greater than what? The available goods and services with which money can buy. That is the quantity of money in circulation to buy those available goods. Do you understand? So it's greater. So government can then increase the tax rate so as to reduce the purchasing power of individuals, thereby checking inflation. So another important thing is to control the inequality of income distribution among individuals varies, are not equal. So direct tax, which is progressive in nature, can be used to achieve this objective, since those who have high income pay high percentage as tax rates. That's the features of what? Progressive tax. That is, in progressive tax, there the income, there will be the tax rate. The lower the income, there will be the tax rate. So more so, inequality of tax income is further reduced when the government provides services which are designed to benefit every human being, or most especially the poor. We have the effects, the positive effect of that particular thing will be on the paupers than the rich. So that is to redistribute income. So that is, the poor will be more advantageous than what? Than the rich. Then to correct the balance of payments. So balance of payment exists where the exports, where there's an excess of what? Import over export. That is, what is coming in is greater than what is producing in a country. Thus, we have a balance of payment problem. So if government wants to correct balance of payment, a country can suffer this balance of difficulties when their excess, when their imports is greater than their export. So to correct this, government will now impose more taxes on imported goods. That's just to discourage the importation of goods. Do you understand? And reduce the tax on the export so as to encourage the production of what? Locally made goods. Then to protect infant industry. So there's need to protect infant industry against well-established foreign industry. So this could be achieved through imposition of import duties, which are designed to serve the purpose very well. Because when, let's assume you are using a particular raw materials in Nigeria to produce something, and that raw materials prices in other countries that they are coming from is high. Do you understand? Government can do away with it and say, see, look our locally produced raw materials to produce this thing. If government want to do that, government will now impose tax on the foreign raw materials so as to discourage the importation of those raw materials into our country. So that is that. Then to check on ozone consumption. No doubt, certain commodities are considered harmful for consumption. Look at the cigarette that we are talking about the other time. Look at all this alcoholic wine. So hence, they are heavily taxed so as to reduce their supply in the country. Taxation can be effectively used to control the production of such goods and services like codeine, all these drugs and some other things. So government will try to put heavy tax on them so as to discourage their importation and or their production. So that is that about the purpose of taxation. So now let us look at economic effects of taxation. What are the economic effects of taxation? The following are the economic effects of taxation. That is, when government has imposed taxes, people have paid the tax, corporations have paid, the tax has been imposed on goods and services. What are the economic effects, both positive and negative effects of taxation? It serves as a deterrent to work. That is, it discourages work. So when there is imposition of heavy taxation on income, especially under the pay as you earn system, workers may encourage from working for extra hours or overtimes, and absenteeism may be encouraged. Absenteeism may be encouraged. So it does not encourage savings, no doubt. Taxation generally reduces taxpayers' ability to save because it leaves less money to spend, not to even talk about savings. So that is the reason why it's also discourage saving. So it does not encourage it at all. Then a deterrent to enterprises. Heavy taxation robs successful entrepreneurs of much of their work. As a result, it discourages enterprises and initiatives to invest. People will not find it light to invent or to be an entrepreneur because they will look at the heavy amount of money that they are going to pay as tax. So that is why some remedies have been taken by government to improve or to encourage the young entrepreneurs. So that is that about the economic effect of taxation. So last but not the least on our learning outcomes, let's quickly talk about tax evasion and tax avoidance. Tax evasion and tax avoidance. These are the two important terms that you need to understand as far as taxes are concerned. Tax evasion is illegal because if you look at the two statements, one is legal and one is illegal. So tax evasion. Hello? Hello? Are you talking to me? So tax evasion is illegal. Illegal in the sense that once you evade tax and you are caught, do you understand? You'll be punished. So if an individual evade tax or corporation evade tax, do you understand? And those involved are caught, they are going to be punished. So tax evasion entails taxpayers deliberately misrepresenting the true state of the affairs of the tax authority to reduce their tax ability and includes dishonest tax reporting. Instead of some people overstate their expenses and reduce their profit. That's tax evasion. Some individuals will declare less income. Some organizations will declare less profits or gains than the amount that they are actually earned. And they will overstate their what? Their deductions. So that is tax evasion. Tax evasion in law is completely illegal. So tax evasion is an activity commonly associated with the informal economy. One measure of the extent of tax evasion is the amount of unreported income, which is the difference between the amount of income that should be reported to the tax authority and the actual amount reported. So if you made 2 million as a corporation and on 2 million, the tax you pay on 2 million is 30%. Let's do this analogy, please. Come in. So let's assume the profit made by a company is 30 million. And this company is to pay a tax rate of 30%. You understand? So the implication is that 30% of 30 million, 30 million is 9 million. 9 million. So 30% of 30 million is 9 million. So this is what the company are supposed to pay as what? As tax. 9 million as tax. But for the company to reduce its tax payments, some company will now say this 30 million, they will now say they made a profit of reduce their profit to 23 million. So when they pay tax of from 23 million, when they pay tax of 30%, so they pay 6.9 million. 6.9 million will be paid as tax. So now the implication is that the tax evasion is minus 9 million, 1 million. Look at the amount of tax that they evaded, 2.1 million. So this 2.1 million, instead of this 2.1 million to go directly to the government, it goes into the purse of this particular company. Do you understand? Instead of them to make a profit of 21 million, because their profit is 30 million, once they pay a tax, net profit after tax, net profit after tax will now be what? Net profit after tax should be 21 million. Do you understand? This is their profits. This is their original profits. But their original profit here will now be 23,100,000. Because you must have added their affiliate tax to the original, the actual profit that they are supposed to make. So that is that about the tax evasion. I think you understand what tax evasion is all about. So that is that about tax evasion. Tax evasion is if government knows this company is going to be what punished for this offense, is a punishable offense under the law. So now let us look at the next line of action, which is tax avoidance. Tax avoidance is not a punishable offense. Do you understand? It's a legal way of finding loopholes not to pay tax. A legal way of finding loopholes not to pay tax. So tax avoidance is legal use of tax law to reduce one tax burden. That is, you look at various ways in the tax balance so as to know which of the law should I use so as not to pay this tax or so as not to pay little amount of tax. So both tax evasion and avoidance can be viewed as form of tax non-compliance, and they describe a range of activities that are intended to subvert a state tax system. Although such classification of tax avoidance is not indisputable, given that avoidance is lawful within self-created system. So it is lawful to avoid tax, but it is illegal to evade tax. So those are the differences between tax avoidance and tax evasion. So those are the things that you need to know as far as Section 5 is concerned. So if there's any questions, reactions, comments before we forge ahead, so you're allowed to do so. Any questions, reactions, comments? Talk. I want you to talk. The class has I've done with the explanation. If you have questions, comments, or reactions, please do so before we call it a day.
Let's move on, sir.
You said what?
Let's move on.
I should do what? As your test, as your last test, because it seems some just put their Zooms, they are not there. So I'll be picking. Ojelade, if I call you and you did not say anything, that's the end. I'm trying to. Ojelade, please, just tell me any two type of taxes that we have. If you are not saying anything, that shows that you are absent. Ajamu Victor,
yes,
5817.
Yes, sir.
So tell me two types of Ojelade is absent already. So tell me two types of taxes that we have.
We have a property tax.
Yes.
We have a value-added tax.
Okay, thank you. Oyeniyi, what is the rate for value-added tax? Oyeniyi, rate for value-added tax, the present rate. So absent. So Oluwatosin, what's the present rate for value-added tax?
Hello, sir.
Yes. Miriam, I'm listening.
Sorry, I didn't get the question.
What is the rate for value-added tax? The rate
for so I didn't get it. I don't know, sir. I joined this.
You don't know it. So try and listen to the video after the lecture. Joined. So Godwin Esther.
Okay, sir.
Godwin Esther. Adeleke Yetunde.
Yes, sir.
So what's the rate for value added tax? What's the rate? You don't know. That's the reason why I said you people should try to take on. You have the floor.
So I just want to answer the rate for the value added tax.
Okay.
7.5%, sir.
Thank you. Thank you. God bless you.
Yeah.
Adeleke Yetunde. Absent. Olatoye Rebecca. Absent. Asajo Oluwapelumi.
Not absent,
Absent.
sir.
What's the rate
Not
for value
absent,
added tax?
Sir?
Rate for value added tax.
7%, sir.
Not 7%. It's not 7%. See, in my next class, I know what to do. You just on your Zoom meeting and you left. Okay, there's no problem. I know what to do. So having said that, I think this is the best way for us to put a halt to this lecture. Try as much as possible to listen to the video. I will share it on the LMS very soon. So take good care of yourself and be ready for your quizzes, assignments, and some other assessments. Thank you and God bless you. Bye.